Africa's biggest banking group by assets, Standard Bank reported a stellar recovery in its full-year financial results as headline earnings per share jumped 57% to 25 billion rand. Credit impairments also improved, and there was also good news for shareholders as the bank doubled its dividend. Joining me now is Sim Tshabalala, the Group Chief Executive of Standard Bank. Thank you very much, Sim, for joining us. The rebound has been seen across banking groups in South Africa. What sets Standard Bank apart from the rest when you're looking at how much of a rebound you've had in the past year?
Xolani, first of all, always such a privilege to talk to you. Thank you very much, and a great question. I think the first place to start is by recognizing that Standard Bank is large. So we've got the largest asset book in the country. We're the largest financial institution by assets, and therefore our loans are the largest. We're the national champions in home loans, and we're the national champions in vehicle and asset finance. And indeed, we do really very well in unsecured lending. Let me not lie about vehicle and asset finance. We're number 3 there, and there are others who are better than us in that space. We grew our deposits by 9%, which is an incredible growth. And we also grew our loans by 9%, particularly in home loans and in vehicle and asset finance. We grew our customer base by 10%. We currently have more than 10 million customers in South Africa and 60 million throughout the continent. And we therefore generated significantly good net interest income as well as significantly good non-funded revenues in the nature of fees and commissions and trading revenues. And so what sets us apart in addition to that is our exposure to operations outside South Africa. As you would know, we are represented in 20 countries on the continent, which include South Africa. And therefore, a fantastic performance driven mainly by the traditional activity of a bank taking deposits and lending. And then an important point is that there was a big improvement in bad debts. They went from close to 20 billion rand to less than 10%, just shy of less than 10 billion rand, just shy of 10 billion rand. And that was an improvement of 52%. Perhaps, Xolani, let me stop there, but those would be the distinguishing features of this performance.
A truly stellar performance indeed, Sim. Some are asking whether you've given up on your dream as a group to become a true global player since Standard Bank is trying to get out of the joint venture with the Industrial and Commercial Bank of China. What are the reasons for that particular, trying to actually sell your stake in that particular joint venture?
Xolani, I'll take you back to when you and I were much younger, to roughly 2010, after the global financial crisis. At that point, you will recall that Standard Bank made a decision to become a regional champion as opposed to an emerging markets champion. And we commenced the process at the time of disposing of all our activities outside the African continent if they were not servicing the African continent. And so you'll recall we sold our bank in Argentina, we sold our bank in Turkey, indeed we sold our bank in Russia. We closed our office in Hong Kong. What you then have left is operations, 20 operations on the African continent, representation in Dubai, London, New York, Beijing, and Sao Paulo, the major money centers of the world which service the movement of capital and money onto the African continent, as well as the Channel Islands where we provide wealth services to people, offshore banking. All of that is focused on the African continent. And so in summary, Squire, we are wanting to be a pan-African champion, and we have no desire to be a global champion. We left with a 40% interest in ICBCS, and we are in conversation with our Chinese partners to dispose of that to them so that we can repatriate that capital to the African continent. Thank you, Colin.
Sim, South African consumers right now are in a precarious position. Households are financially under strain. And in just under 2 weeks, the Reserve Bank MPC will be meeting to announce its interest rates decision. Many are expecting a hike. What are you expecting? And of course, if it is another hike, that doesn't bode well for many consumers who've had to deal with a hike in electricity prices, inflation, petrol prices and the like?
Xolani, the first point I would want to make before just doing a quick analysis of this is that inflation actually has the biggest impact on the poor. And we must never forget that. Inflation has got the largest impact on poor people as opposed to wealthy people. Secondly, inflation expectations are on the up globally and here in South Africa. So you and I were speaking about the conflict in Eurasia. The impact of that is going to be to increase the price of oil and therefore exacerbate inflationary pressures. The Reserve Bank has a mandate to manage inflation, and the way it manages that is through policy instruments by increasing interest rates. There is no doubt that interest rates are going to increase during the course of this year by between 75 basis points and 100 basis points. And so at the next MPC meeting, unless things change dramatically, all the evidence suggests that a rational policymaker would increase interest rates. That does have a negative impact on consumers because it squeezes their disposable income. But remember, I said to you, inflation has a dramatically negative impact on the poorest in society. Thank you, Colin.
Sim, I wish we had more time, but thank you very much for joining us to talk about that stellar performance and rebound by the Standard Bank Group. Sim Tshabalala, the Group Chief Executive Officer at Standard Bank, joining us on that story there.